So overall, UPI covers around 70% of digital payment, right, in India, somewhere approximately that number. And cards, which used to be 70% earlier before UPI, has reduced to around 20-21% only, right? And then there is net banking, wallets, etc. Now,
Okay.
why has that happened, right? One is, of course, when we think about it, convenience is something which is on top of our consumers' head. I mean, that UPI has established across the world, and you would have seen across the world, different countries are adapting that mindset where they're developing their own QR-based or instant payment methods, right?
Hi everyone, welcome to Minimum Viable Podcast, a podcast series brought to you by PM School. I am Ankit, one of the co-founders of PM School, and I co-host this podcast along with Nikunj, who's a really good friend and a co-founder at PM School as well. Today's guest is a very interesting person. He's a really good friend of mine. I've known him for the last 5 years and 6 years, I think. And I've seen his journey from being an entrepreneur, exiting successfully as an entrepreneur, then moving on to Coupon Dunia, and then moving on to senior PM at Rummy Circle, where our time overlapped. And today he heads the product team at Nium, at least the India product team. Akash, right?
Yeah.
So yeah, Akash, welcome to the podcast. So glad to have you. So glad to see you after a long while here.
Thanks for inviting me, and it's a pleasure to be here, Ankit.
Awesome. So Akash, how's it going? What are you up to at Nium?
Everything's good. So at Nium, my role is to I'm leading the product team over here in India. My responsibilities spread across most of the onboarding products, the core compliance, and the banking products which Nium has. So core payments, payout, anything related to compliance, risk is something which is under my purview. We are obviously expanding across geographies in APAC, EMEA, and North America. So it's an exciting phase to be a part of Nium now.
Nice.
Awesome, yeah.
Super. Akash, so I was just looking at your LinkedIn profile. Unfortunately, we have not interacted. Our paths haven't crossed. But before Nium, you worked at Stripe. You were at Razorpay, and you were at Games 24/7. But going way back, right? You had your own startup, starting Paintcollar. And I've seen this in a lot of LinkedIn profiles. I know like at least 3 more ex-entrepreneurs who have transitioned into product. Is there something very specific to ex-entrepreneurs transitioning into product? And the reason I ask this is a lot of entrepreneurs and existing startup guys have joined PM School and they want to get into product management, right? So if you can just walk us through how did you gain certain skills in your startup gig, and how did that kind of transition into you being like a product management leader? Yeah.
Oh, for sure. So my role, so let me start with my role at Paintcollar. So we started Paintcollar because it was a great idea. We had a tech co-founder who unfortunately wasn't able to continue after a few months. And we had to, someone had to step up in the founding team to take care of the technology aspect, or the taking care of the entire tech and product aspect. And fortunately or unfortunately, I stepped up at that moment. And I took over building the core product that we had, wherein an artist could upload their artwork, see their artwork converted into merchandise, and within seconds, they'll be able to sell on our platform with their defined profit margin. So my journey was first into software product or building software products, and I had to learn a lot. And back at that time, during 2014, 2015, product management was not a very popular function. It wasn't popular in India, at least, while it was popular in the Silicon Valley. And we were trying to learn some of the concepts from successful startups in the Valley, trying to understand what product managers over there do, or what are the product management function over here means, right? And this is where I figured out that, hey, and the fundamental that I understood back then was, hey, you need to build meaningful products. And that's what product management is about, right? Deciding whether a product is actually going to be useful for your customers or not. So apart from building the product, where my role was into just coding stuff, I started interacting with my customers as well. I used to go for sales calls So we had a lot of like top media brands were using Paintcollar as a software. And I started interacting with these guys. I started taking support calls. And then I started understanding that, hey, I mean, most of the flashy stuff on the website, it doesn't matter at all, right? I mean, the core product which you have is how would you help the customer select the design which resonate with them the most? How would you help them to check out much more faster? And then how would you provide them the code or a fantastic support? And that's it, right? I mean, you don't need to invest a lot onto peripheral aspect, right? So that's the fundamental which I understood. And of course, I mean, the decision I had post Paintcollar was either you venture or continue into engineering management space, or you transition into product management space. So I personally was never a good coder. I am not a good software developer. So I decided that my skills would be much more utilized into product management. I have a family background of business. I understand business in and out. So that's where I thought I'll build my career into.
Awesome, yeah. I think that's a great elevator pitch for anyone looking to, trying to switch from ex-entrepreneur to a product role. So we see a lot of people enrolling at PM School. We see a lot of ex-entrepreneur. They're trying to transition into product, and I think that's a great, what should I say, a pitch which they could, probably frame their story as well around. So Akash, tell me, I've known you for a while now, and we used to work together. We have participated in hackathons together. We have spent, I remember that hackathon in Bangalore, which we participated, you, I, and Ankur Suri, we spent like a couple of sleepless nights. And I always imagined you as a very good gaming product manager because you were really good at it, right? So what motivated you to, transition into fintech, right? To probably practice product management. Why fintech? And what did you work on at Stripe and Razorpay?
Oh, okay. While I was leaving Games 24/7, I was trying to. So while we were working at Games 24/7, again, you would remember there was a project which was executed called Instant Withdrawal, where
Correct.
the money was instant withdrawn and it would be credited into the player's account like instantly, right, without waiting for a couple of days, where there's a process, there's a waiting time, etc. And that increased retention more than any other project within our like time period at Circle, right? And that's where I started wondering whether in any kind of a product, payments, what is the role of payments, right? And what is the future of payments in terms of how it is being embedded into all of the parallel products, right? At the same time, Razorpay was a brand which was coming out to be a very strong brand in the payment space, right? It was one of the Y Combinator product, which was one of the first few who got into Y Combinator. And the product managers at Razorpay were very vocal about the product culture, right? And how they are trying to create difference within the SME and and in their customers' life in general. So both the factors combined together, I thought this would be the right time to venture into or to understand. I was just curious about the fintech space. As I said, I mean, how can I learn more about what is the role of payments in a business, and how would digital payments impact a business life cycle in general, given the and there was a lot of introduction. I mean, at that moment, we saw a lot of development in the digital payment landscape, right? I mean, there was UPI, there were wallets. Wallets were going like crazy, and people were coming. So the world was shifting from a API first approach to a no code first approach, right? Where you would have just a block of code which you can copy paste within your website, and there you go. You are all set to start accepting payments. So that was a very interesting phase. I was curious about it, and then I joined Razorpay. So at Razorpay, my role initially was to handle the payments platform. So there were two major blocks within Razorpay. One was payment method, wherein all cards, UPI, net banking, etc. There were product managers who would introduce new features and take care of how the payment method would function. For those payment method to function, you need a strong internal system, and you need a strong setup, right? I mean, be it integration with your partners, because at the end of the day, Razorpay or Stripe is an aggregator, right? You need underlying partner to function with. So those integration, how would you use those integration in a much more beneficial manner so that you provide the best experience or the best success rate to your end customer? How would you onboard a particular merchant, right? Because merchant onboarding is very different. It involves like identity verification, KYC, KYB, and you have to produce like minimum friction while you are taking care of all those stuff. So I started there. And then I also went ahead to take care of some of the new products which Razorpay launched within its life cycle. So Razorpay Optimizer, which is an orchestrator platform where you can connect with multiple gateways and route it according to your business need. That's something which I created from scratch. So yeah, so these two aspects was something which I was taking care at Razorpay. One of the things which I was very curious about while at Razorpay is how does cross-border, so domestic is fine, domestic I understood really well. Cross-border is something where there comes a lot of complexity, right? And I wanted to explore or find out more about that aspect of payments as well. Because a country is never very concerned when the money is moving within its landscape, right? A country is concerned when the money is moving out or money is moving in. Right? And that's where the complexity comes in. So I joined Stripe to take care of some of the expansion market for within the APAC region, where I was taking care of India, Indonesia, South Korea. And this is where I try to understand the complexity within the cross-border payment, the complexity of setting a payment company in a new market or small market in itself. And yeah, that was my role at Razorpay and Stripe.
Thanks.
Awesome.
Thanks, Akash. Super elaborate journey. My follow-up question was essentially transitioning across these three fintech companies, and you kind of answered that. Going one level deeper, since you worked in fintech, right? As an outsider, I've seen how UPI has grown, right? Just looking at volumes, obviously, I don't know hard numbers, but it would be lovely if you could share certain fintech insights with respect to like any hard stats you remember. But I was just reading a report. I think UPI has surpassed any transaction sort of method in India. I think some 70 billion transactions in 1 year, if I'm correcting that stat. That's massive scale, right? And over 60% year-on-year growth, right? I would not, in fact, I don't think any payment method has grown at this sort of pace in the last like decade or even more than that. So would you care to share, you worked in domestic, you obviously had that exposure at Razorpay, and now working with, let's say, having that exposure with Stripe and also Nium, could you share certain insights? It could be obviously qualitative at a consumer level and also certain sort of stats that you might have come across, which would be dumbfounding for a lot.
Yeah. For sure. So, so just to like give a percentage-based statistics. So overall, UPI covers around 70% of digital payment, right, in India, somewhere approximately that number. And cards, which used to be 70% earlier before UPI, has reduced to around 20-21% only, right? And then there is net banking, wallets, etc. Now, why has that happened, right? One is, of course, when we think about it, convenience is something which is on top of our consumers' head. I mean, that UPI has established across the world, and you would have seen across the world, different countries are adapting that mindset where they're developing their own QR-based or instant payment methods, right? So the convenience compared, so if I have to do parallel comparison between cards and UPI, in a card-based system, I have to carry the card or like enter the card number when I'm making a payment online, which is like a few steps ahead, right? It's difficult. However, UPI is on my phone. I don't have to carry any other device. I can just scan anything. That's like super easy. And one of the good things which NPCI did was they mandated UPI to be interoperable across the applications, which means that if you have Google Pay, you don't need to worry about a Paytm QR or a PhonePe QR. You can scan any QR and it will just work seamlessly. So I guess the experience in UPI is so great, so massive that we have seen a reduction in the cash percentage or cash usage percentage. Well, just last year, there was a data that the cash use or the digital transaction in India has grown to 40% of the overall transaction that happens, right? Which is massive. It used to be 3-4%. before UPI was launched, right? So that is the strength in focusing on customer experience and building towards it, which the India stack has proven very well. Second aspect which helped in, and this is where I feel the government has played a very crucial role, very big role, is government is pushing UPI like anything, right? I mean, one is that it's very convenient. People can pay very easily. But there is a push where NPCI or RBI has asked the banks not to charge any MDR, the merchant discounted rate, for any UPI transaction, right? So you, as an acquiring bank, cannot charge for a UPI transaction to your merchants. Unlike a card transaction or any other payment method where you charge, say, 2%, 1% of the transaction and the fees, right? So small merchants or large merchants, even if you go to apps like Zerodha, you will see that UPI is free of cost, whereas net banking, you'll have to pay around 9 rupees for every transaction. Right?
Yes.
That empowers or forces you as a merchant to push UPI also, right? Because that's beneficial for you.
Yeah.
And I think that entire mindset of our government, RBI in general, has been super positive in the direction of uplifting digital payments.
Super insights, Akash. Oh, Billy, I understand where you're coming from. We also have run certain campaigns on UPI because it's free for us. As you rightly said, on the merchant side, we would want a lot of our customers transacting at PM School would preferring UPI. Going deeper into now how UPI is evolving, right? The UPI stack has recently come up with its new set of developments. Obviously, as an outsider, I cannot grasp the full impact of it. If you could sort of shed certain light, I think they've come up with certain sort of lending APIs, and they're essentially trying to sort of scale UPI to what it could potentially be like 10 years down the line. If you'd sort of just say.
Right. Yeah, I mean, this was something which was inevitable. So, see, I mean, fundamentally, I see payments in a very okay. I can give you my view, what I think about payments, right? So, there's a bank account. You have your money parked over there, and whenever you are doing payments, you are pulling money out of it or pushing money into it, right? Now, anything, any mode of payment method is just a reference or pointer to your bank account, right? Be it UPI, BPI handle, or card number, everything is pointing to your bank account, right? So everything that you can do with any other payment method, it's possible to implement the same stuff on UPI as well. So credit on UPI is massive. And I would say there is a benefit of, again, I mean, user experience on it, where you have a UPI ID, you have the transactions that a particular person or the merchant has done, and you'll be able to, with that transaction, you'll be able to analyze the risk that the person or the merchant has and calculate their credit score, right? In a card, you still have to issue that card, create a credit line. There's a Visa or MasterCard involved into assigning a credit card. I guess UPI makes it much more convenient because all the smaller transaction is where you use UPI, and there's the number of data points that you get is more compared to a card data, right? So it's less risky, it's more convenient, and I guess the UPI stack has been evolving in that direction where it overtakes cards or net banking or anything at all. So yeah, I mean, it's super interesting to see how UPI has grown so far.
Okay.
And yeah, I guess it will grow even further in much more product offering that it has to offer.
Got it. So obviously the government has invested heavily, and that's played a huge role in scaling UPI as a transaction method. But now, how does UPI and rather NPCI make money, or is there something in the plans, the roadmap, right? Because somewhere down the line they'll have to figure or they'll have to charge, right? What is that revenue model? And I'm not sure if you're already speaking to NPCI and you have some exposure there.
Okay, so NPCI makes money out of it. So NPCI is an independent entity, right? I mean, it's not non-profit, of course, but it charges the acquiring bank a percentage for every UPI transaction which is done. So NPCI you can imagine NPCI is a competitor of Visa or MasterCard or a network which facilitates transaction. It has its own tech cost. It has its own integration to take care of with issuing banks, etc. And it has to pay for it, right? what RBI has mandated is the acquiring bank. Say, for example, HDFC is acquiring the merchant, then HDFC cannot charge MDR to the merchant, right? However, HDFC will have to pay NPCI some cut. So this is where the banks were making loss. I guess there are multiple steps which RBI has taken. They had set up a fund for covering those losses for banks initially back in 2022. And now there are discussions which is happening with RBI, with NPCI, with the room to implement some MDR at a minimum just to cover the cost of acquiring merchants. But sooner or later, maybe a few years down the line, there will be charges, acquiring charges on UPI also.
Got it.
Akash, slightly changing gears now, right? And like we have been talking about, go to market for a long while, you and I on WhatsApp. I think we connected long back on PM School's WhatsApp group as well, right? Like back in the days at Ravi Circle, if you remember, our go to market was fairly simple. Like figure out a user persona, the cohort of users, do a small test on that. If the experiment is successful, launch it across the users, right? So probably drawing from your experience at Razorpay, at Stripe, and now at Nium, how do you guys plan a go-to-market strategy, and essentially what are the key constituents in a go-to-market strategy? And think of the target audience of this podcast as people with 2 to 5 years experience, planning their GTM probably on a daily basis, right?
Yeah. Cool. So, Seven, I think as every product manager has the same kind of fundamental, right? B2C, B2B. The benefit with B2C is you get multiple touch points and like constant feedback loop is maintained because there's direct consumers using your application. Right. With B2B, you can replicate it. And this is my understanding or how I've been functioning in B2B setup is I constantly talk to my customers, right? I mean, one is create that feedback loop, go into sales call, go into support calls, go into any kind of service calls that you have with the customers, just to like hear them out, right? I mean, user empathy is something that we talk about, but implementing that is a different angle altogether, right? And in B2B, we have to be very, very close to the customers as product managers, because when we think about, so GTM comes into every project that you execute as a product manager, right? The first stage of it is when you are developing a project, you try to understand what are you building, right? And what is the value your product is delivering? And who is it delivering the value to? Which means that you have to be very, very particular about the user segment that you want to target. And especially in B2B use cases, we try to build a very small version of it, or even prototype of it, and go out to our customers, because we can talk to our customers very freely and we can get their time around what do they think about this particular product. Does it fit into their own business proposition? So what I try to do with my team, my product managers, is we go on to a customer conversation and we just try to listen to what is the business they are doing, what is the value that they are delivering to their customers. And then we take that back internally, and then we try to synthesize what is the value that we can add as a company, as a Razorpay, as a Stripe, or as Nium, to grow their market or to grow their customer base, right? And this is where, when you're thinking about GTM, you need to think about, okay, what is the core value which I'm going to add through this particular product feature or my project, and build only that, right? I mean, don't like overinvest, like don't build on it too much, and see whether the hypothesis that you had that, hey, I mean, my product or project will deliver some kind of a value is actually coming to life or not. Right, you will either get the feedback early enough to iterate, or you'll get the feedback to build more, or you'll get a feedback to kill the product and just move on with another project, right? In any case, building a product in the B2B space requires a lot more investment compared to B2C. And it's always good to think about your customers first, build an MVP, go out in the market, talk to your customers, get the feedback, and then launch.
Got it. Akash, just to like split GTMs and like product success, right? obviously every product or any feature that I would want to GTM to my audience, I have like a specific set of, as you said, right, a segment that I've identified for which I want to GTM. Now, there's like a goal at a product level, but how do you define success for a GTM, right? That's question one. And just to sort of now split that question into, now when I GTM onto an app like Swiggy or Razorpay, B2C or B2B, right, where you already have an audience, right? There, I think GTM is very structured, and okay, this is the audience I'm going after. Like I'll GTM for like X% of the users, and whatever your like end goal is. But now changing like the GTM for, let's say, a very early stage MVP, like let's say you have just built the first version of the product out, you're just like at seed stage. Now, how do you GTM? Is there like a nuance? So obviously, the first question is essentially how do you define success for a GTM, like compared to segregating the product success out of a GTM process. And the second question is like the nuances of like an MVP GTM to like a very mature set of like Razorpay, or let's say.
Understood. Well, I think the MVP concept like is common to every industry, every segment, B2C, B2B, I would say. I guess, Niku, just so that we are on the same page over here, you're asking me around how would I define success for an MVP versus a large product build that I'm making, right?
Yes, because the GTM for a MVP will be plain simple, right? Maybe you will just like, my assumption, and maybe correct me, is just like traction. But when you're GTMing a feature for Razorpay, let's say you're building something for SMBs, you are launching a, let's say, lending product, right? Their success would not just mean like traction, pure vanilla. You might have like a certain target. Let's say by the end of the quarter, you want certain dollars, right?
Yeah. No, there's, see, I mean, one of the things which has changed in the B2B landscape since the old days is B2B product space or B2B products are also very customer focused these days. The kind of obsession that you'll see at Razorpay or say Stripe or Nium is massive, right? I mean, and this is where the hypothesis that you develop or at Razorpay or Stripe that we used to develop was around the value that you want to deliver to the customer. Say, for example, if there's a very popular product called Magic Checkout at Razorpay, right? Which reduces or increases your conversion rate by around 60-70%, right? That's the value which I'm hypothesizing, I'm thinking that it will deliver to my customer, right? In a MVP, what is in my minimum build that I'll make, there are two aspects of it. How will I acquire customer or agree the customer to be a part of my MVP product, right? Because unlike B2C, where you can release a feature to 5% or 10% of the audience, you will have to ask the customer if they're okay with the change that you are doing because it impacts their business directly. And second is, more often than not, it requires certain kind of integration from the customers as well, right? So you'll have to ask them to integrate with a new product that you have built, right? And when you are asking them to like invest in it, you better be sure about the value that it is going to deliver. And this is where you define a number within a time period, right? I mean, success metric is something which I've seen it's loosely defined usually, but at Razorpay, at Stripe, I've seen the culture of defining success metric very, very tightly, right? So say, for example, if conversion rate is something that I'm expecting out of my product, what is the percentage, what is the minimum percentage that I'm expecting that should hit the product market fit criteria? And within what time period, right? There cannot be like extended time period over here, right? So say if I'm expecting the final product to deliver 60 to 70% conversion rate uplift, in the MVP, I should at least consider 15% uplift in my conversion rate within 90 days of going live with a customer, right? And this is how you define that, hey, I'm certain MVP has hit their product market fit, and then you try to build more on it, right? And if it doesn't, you have to kill the product, right? So that's the way we used to think at Razorpay or Stripe, or even at Nium, we think in the same manner. But yeah, I mean, you're right. There are certain products that you do launch with business objective in mind as well. That again is common with B2C and B2B, right? I mean, you want to cap the churn, you want to increase the frequency of say a number of orders at Swiggy. Similarly, you try to analyze these themes, these metrics at B2B as well. What is the cause of the churn? You try to understand and you build certain products in that direction, or opportunities which will help you grow. Again, taking an example of Razorpay Optimize that we built, it was built for to. I mean, if I talk about business objective plainly and not the customer value, it would have, or it would help us in reducing the churn, right? Because as the company grows, they want to integrate with multiple payment partners who provide them with better rate, right? Cost becomes a very crucial factor when you grow as an enterprise. So we built Optimizer so that, I mean, the volume flows through us and the customer has the flexibility, or you can say they have an ease of switching between the payment gateway as good as clicking a button, right? Now, for Razorpay, it meant that the volume still routes through us, and I charge a percentage of the transactions, which is routing to other payment gateways as well, right? Now, again, while it delivers, and this is where a well-balanced approach comes into the picture, right? While it delivers the value to the customer around the ease of switching between the payment gateways, it also has to mean something valuable to us as a business, right? If it doesn't produce that dollar value, then probably it's not a good business to be in, right? At the end of the day, the business needs to earn, right? And for every product or project, we try to define both the objectives, the customer objective as well as the business objective. The business objective can come a bit later if the customer objective is achieved. But if it doesn't come, then it's a product which we cannot afford to have. And then we have to take a negative decision in that direction.
Correct. Akash, I have a follow-up question to that. If you remember back at Rummy Circle, right, we would do a lot of guesstimates to at least predict, let's say an uptick in the revenue which we might get. Right? How do you guys do it, or how you used to do it at Razorpay and Stripe? Would be great if you can, shed some light on that.
Oh, for sure. So I guess one of the easiest way to do it, if you have your hypothesis ready, what is the value that you will add to the customer, you have your user segmentation ready, you can like directly go ahead and talk to the customers, because it's the access to customers or getting their time is pretty easy in B2B space, right? I mean, unlike B2C where there are millions of users which you have to interact with, right? And they contribute like significant volume. So everyone's voice is pretty significant over here. A benefit over here is that they will tell you, the customers will tell you why they will not use the product as well, right? And that's very, very valuable or crucial while you're estimating the value it will generate. Now, when we think about payments product or fintech in general, we try to see what is the value or how much it's in the metric of conversion rate, right? How much conversion rate I am improving for my customers. And if I take that example, a good guesstimate to make over there is what is the trend in that market? Say, for example, if I'm planning to introduce Pix in Brazil, right, or UPI in India, I would try to see if I have the user segment which I'm targeting, right? Will they benefit from launching UPI or not? If yes, then the kind of business we serve to, how much UPI transaction that we expect from from like introducing UPI in general. Now, the way to think about is, I'm taking Stripe's example over here, right? Our major business in India used to be for cross-border, for export merchants, right? Where the merchant is selling outside to customers outside India, and they have to enable international payments. This is where Stripe used to shine. Introducing UPI will not make any benefit or will not add value to my customers, right? Which is why Stripe never invested into UPI back then. But in case of Razorpay, UPI is a top product which I'll definitely target, right? Because it's all domestic product. It's it's small value transaction that is happening over here, and I would launch that. Now within Razorpay, I can divide my customers into enterprise customers and SMEs. enterprise customers with a high ticket value will not benefit from UPI, while SMEs with a low ticket value will benefit from UPI. So average transaction value of UPI is around 1,600 rupees, right? So any merchant who has a minimum selling price of say 1 lakh or 1.5 lakh, there's absolutely no point in launching over there, right? And like identifying that segment where your product is targeted or to whom your product is targeted for helps you a lot in getting the guesstimate. Then you can like directly go out in the market, figure out which customer will use it, will not use it, and then develop a hypothesis accordingly.
Got it. I think guesstimating is as much of an art as much of it is science, right? And eventually you get better at it, is what I am assuming, right? Coming to the last question, right? I wanted to place yourself in a PM's shoes, right? And let's say if you are GTMing a product or a feature, right? Like what are the teams which I should be talking to? Let's say you can drawing from your experience at Razorpay or at Stripe, right? Like what are the teams I should be, aligning with? And how do I maintain that alignment within the teams as well? Because I'm pretty sure it gets pretty messy, right? And how do I ensure that all the teams are aligned to that same GTM, to the same business objective, right?
Sure. So that's actually a good question. So there's a lot of cross-functional stakeholder, to be honest, when it comes to like B2B, right? There's sales, there's support, there's solution engineers and whatnot. And everyone, you have to be in sync with everyone, right? So one of the hard fact over here is that there are some teams who are day in, day out, like talking to customers, and you as product managers have to leverage their role to get or to have a constant feedback loop, right? So say support team members are like looking at customer problems day in, day out, right? So rather than you going out to like talking to, and it's always good to talk to customers directly, but they'll give you a broad view or an overall view of what is the biggest problem of your customer set, right? And this is where you can take feedback constantly and leverage their roles to get proper feedback and build, like try to incorporate those items within your product roadmap. So as a product manager, as a B2B product manager at Razorpay, say I'm taking a hypothetical example over here, I would try to see what are the products, what are the features that will benefit my customers in general by taking a look at market, by talking to customers, etc., directly getting the feedback from customers or market. I will also go to sales team members to understand what is helping them win the deals, what is helping them lose the deals, right? And what are the top features that I need to like build on, which is helping them win the deal, and what is the features that I need to add, which will help them block or complete the lost deal, right? For solution engineering team members and solution engineering is the team who helps in integrating the product for our clients, right? These are the team members who get into the picture after the sale is made, after the contract is done, right? And you would want your customers to go live faster, right? Because if there is a frustration with the customer into integrating your product, you are not doing something, or there's some problem within your product.
Right? Yes.
So you take the feedback from here, you give it to the relevant team that, hey, you need to solve or reduce the time to go live, and like make it much more easier for your customers to go live. And then support is after you go live, after that integration is done, what are the support problems that your customers are getting, get that into your product roadmap. So I usually tell my product managers, or I myself try to divide my product roadmap into 3 aspects. One is retention, second is acquisition or growth, and third is innovation. Retention is the major part where I try to get feedback from existing customers. What are the problems they are facing? Acquisition is something that I get from, or growth is something that I get from existing customers and market. What are the features which will help them increase their business volume with the product that we have in the market? And innovation is something which product managers feel that, hey, and this is going to add value to our customers, this is going to be groundbreaking, and I'm okay if it fails, but there's something I want to experiment with. right? And with all the feedback that you get from cross-functional team, you try to arrange this in your product roadmap. Ankit, to answer your second question is, how do you publicize this roadmap which you have built, right?
Yes.
And it's very crucial that every cross-functional team is sold on what you are building, right? And I guess plain data or plain numbers help over here a lot. When you collect the feedback, you also collect the impact that the team member feel is going to be added with their proposed item, right? You distill it, you try to make it much more real, and then you add your hypothesis or the projection or the target that you have for the item, right? Now you need to align all the cross-functional stakeholders behind your roadmap, right? Tell them that, hey, this is the 10 items that I'm going to execute in the next quarter. 3 of them is going to add value to my, or cap my churn, improve my churn rate. 2 of them are going to help my volume grow. And some of the things that I'm experiment will help our product make more stable, and will be first in the market with some of the products that we are going to launch in this section, right? Any question or concern is something which we should address before the quarter begins or before the execution begins, right? Because these are the team members who will bat for you out in the market, who will sell the product out in the market, right? And if they are not convinced, then probably your customer is also not going to be convinced with the product that you are building.
Awesome, Air. Thank you so much, Akash, for giving us time. We are almost, this is the end of the podcast, right? And I think with this, we've got a couple of playbooks. One playbook would be a go-to-market for product managers, and the other playbook would be people looking to transition from being an entrepreneur to a product manager. So thank you so much, Akash, for spending your valuable time with us.
Thanks,
My pleasure.
Akash. Nice to see you like on a Zoom meet. Hopefully we meet face to face soon.
Look forward to it. It was a great time. Thank you so much for having me. It was fun. Brilliant conversation.
And if you're looking to hire APMs, PMs, senior PMs, feel free to reach out to us.
For sure, sir.
All right.
All right.